Hello, I'm joined by Peter Slabbert, the Chief Executive Officer of Avon Rubber, who've reported yet another set of excellent results. Peter, welcome.
Thanks.
Just before we go into the results themselves, can you give a brief description of the business as a whole?
Yeah, we have two very distinct divisions to the company. Firstly, Protection and Defence, which manufactures respiratory protection products, selling primarily to militaries, but also to first responders and industrial users as well. Our primary customer there is the US DoD, where we have a long-term sole source contract, but we sell to more than 50 or 60 militaries around the world. The other side of our business is the dairy business, where we sell a product called a liner, or in the US they call them an inflation, which is a consumable used in the automated milking process. And we are by far away the global leader in that product as well. We operate primarily out of the US. We have a base here still in the UK, but we also have emerging operations in China and Brazil as well.
And these results have beaten our previously raised forecasts. What were the main drivers?
Yes, most analysts raised their expectation during the course of the year, and because of a strong final quarter in both sides of our business, we managed to come out a little ahead of them. Overall for the year, we saw operating profit up 20% and earnings per share up a pretty strong 30% for the year. Importantly as well, we generated a huge amount of cash, and we've moved now from being having debt on our balance sheet to being cash positive at the year end.
And do you think you can continue to have such excellent performance in terms of margin in protection and defence?
Very much so. I think for some time we've said we believe the protection and defence business is capable of making mid-teens return on sales. And remember, back in 2009 we were making about 5%, and having hit 14.6% during the course of this year, I think we're going to have to start raising our expectations a little. And I think there's a lot to justify that. We're moving to a richer mix of sales. Mm-hmm. We've taken our cost base down by consolidating facilities in the US. So I think in the protection business we'll start to see the operational gearing effect coming from sales growth going straight to the bottom line. So yes, I think we can push forward in protection.
Good news. And is there a similar trend in dairy that you see?
Yeah, dairy, the returns are already exceptional. We make nearly 20% ROS in the dairy business, but strong opportunities to continue to develop and grow that business. We have an emerging market story there, which is why we've opened in China and Brazil. Those markets are hugely growing demand for animal proteins, such as dairy products, and we're well positioned those markets to take advantage of that. While in our more mature markets in North America and Europe, we're introducing new technologies and, importantly, new services as well. We have a new program called Cluster Exchange, and I think both of those things are going to drive growth in our more developed markets as well.
Can you give us a little bit more detail on Cluster Exchange?
It's a service program. Traditionally, we've sold a farmer a product, and he's had to change that product himself. It's a consumable, and in North America, they might change it every 2, 3, 4 weeks, that frequently. So we've taken that hassle away from the farmer, and importantly, allowed him to have more uptime in his parlour. And you need to remember, North American dairy farmer is a business. And uptime of his very expensive equipment is hugely important to him. So taking away that chore from him and giving him greater uptime with his huge capital investment is seen as a real benefit. And that program, only launched 12 months ago, has been spectacularly successful. So we have real optimism that will provide a driver for growth for many years to come.
With a lot of your revenues coming in dollars, what's the FX effect been over the last year, and what do you see for the next 12 months?
Well, over the last 12 months, yes, the weaker dollar has hurt us because most of our earnings are dollar denominated, and on translation, that's cost us about $700,000-800,000 at an operating profit level, and has reduced our growth metrics probably by about 5%. I'm not in a position to predict the foreign exchange markets going forward, but if the dollar remains at its stronger levels, sub 160, that should have a similar effect, a similar positive effect on our numbers in 2015.
What are your plans for investment over the next few months?
Well, we've had a lot of investment in the business over the last few years, particularly under a program which we've called Project Fusion, which is a 3-year program which will end in 2015. That's delivered 11 new products in 2014 and should deliver another 20 or so new products in the current year. That program will end, and that should reduce our CapEx spend from 2016 onwards. However, given the strength of our balance sheet, I believe if more opportunities arise, we're certainly prepared to invest in those opportunities. But our CapEx is not just, and our investment is not just in the protection business. We're starting to invest in new dairy products and technologies as well, as we position ourselves as the leader, global leader in the milk harvesting process. And of course, on top of that, given our balance sheet again, we will consider acquisitions as well. All our growth so far has been organic, and I believe we still have strong organic growth prospects, but an acquisition to overlay on top of that growth would be nice as well.
And so is there anything in particular an investor should look out for in 2015?
Well, I'd like to say more of the same, the strong growth that we've achieved over the last few years. And I think a key cornerstone of our management style and philosophy has been consistency of strategy and consistency of executing against that strategy. So we'd like to take that into 2015. More specifically, in the protection side, I'd like to see growth in the fire section, which we have a new product called the Delta, recently launched. We have 2 new programs with the US DoD, which we hope to bid and win during the course of the year. First of all, a new aircrew gas mask, which should come into service in 2016, an emergency escape breathing device for the Navy, which again we would look to bid during the course of this year. Both real opportunities for long-term growth for our business. On the dairy side, it's a little simpler. It's continuing growth with our higher technology offerings, such as Impulse Air, continuing with the cluster exchange program, which we talked about earlier, and we expect to see real progress in both China and Brazil.
Excellent. And congratulations on a very good set of results again. Thanks very much. If you'd like any more information, please go to the Edison website.